Good morning, everyone, and welcome to the On Time on Target morning brief, where we are investing in fire pot precision on a daily basis. Today's topic is 529 plans on how to save for college. So there's a couple different plans out there. There's 529s. There's a covered LESA that work very similar. There's also state-sponsored plans where you can Texas Tomorrow Fund. There's one in Louisiana where you can get a benefit from the state where they match some money into your accounts. So there's several different mechanisms, if you will, to save for college for those that are college bound. However, the 529 is by far the largest one in number of assets. So that's what we're going to talk about today. That's what I use for my children. I have a senior in high school, so therefore not only is we're transitioning from what I will talk about initially is kind of how to set up and how to invest in a 529 plan. And then secondly, not more importantly, but once you've done a good job at step A of putting a bunch of assets into this account, step B is grow those assets. Step C is how do I now spend those assets on my little princess who's going off to college next year. What's the right way to do it? How do I use those funds that we've worked so hard for and we've let built out over time, and what can we use them for? That sort of thing. That's what I'll be talking about today. And that's the question of the day, is how to use the funds. As far as our short-term investing stuff, been on fire with some trades lately. We'll try to continue that up. Futures continue that today. Futures are up slightly based off the good jobs number we had this morning. So again, I would favor longs, but the two longs I have for this morning are both pretty weak. INMB is a Alzheimer's. It's a bio firm that has some breakthroughs in Alzheimer's. Some good news in Alzheimer's, not necessarily breakthroughs. And then HUT, which is a Bitcoin mining fund, HUT, which is the one I have pulled up for my primary long today. As they announced this morning how much they've been able to mine in Bitcoin, blah, blah, blah. It's a crypto story. However, it's moving the needle in that stock, and it looks poised to go higher. It's up 6% right now. Plenty of volume. On the short side, we have American Eagle Outfitters with some earnings out there today. Or out there earlier this morning. You'll see that on their chart. They're selling off pretty hard. And then also AI, which is C3 AI. They missed earnings as well. They're down 8%. So I kind of favor those to the short side. I have other Chewy, not Chewy's the restaurants, but Chewy, the pet food company, is selling off hard after earnings. They're down 9%. And then HOFB, which is some form of entertainment company. They had to cancel a big concert, the Highway 71 music festival, due to COVID. So they're selling off like 11%. That's kind of out of our window, but we can certainly switch to them if need be. So that's what we got for our show today. For checking us on a replay, please subscribe. Make sure you hit the notifications bell. Picking up about a subscriber every third day or so. So please keep checking us out. I like it. It means the content's good and you're learning from it. If you want to join us live in the room, it's $25 a month. Go through OTOTnow.com. We'll show you how to do it. You can come in the room. You can ask me questions real time. And with that, let's go ahead and get started. All right, welcome back, everyone. Here is the lineup card for the day. Make sure you read the standard disclaimer there. This is a financial education presentation. You have to do your own due diligence before acting upon anything you read this morning or anything you hear this morning. And in full disclaimer information is available at OTOTnow.com. All right, today, Thursday, September 2nd, one of my favorite days from a perspective of our family has 4 birthdays grouped together. So we go into birthday season, and of which is concurrent now at the current stage in our lives with volleyball seasons. So both of which are hectic. We are now out of the backside. We had our 4th of 4 birthdays yesterday. Good, successful event. And it's not quite wrapped up. We have one more party left to go. But for the most part, big sigh of trying not to be exhausted during this time. Just so much going on. But another good season for the family here. All right, back into the markets. September, what does that mean for the markets? September is one of those challenging months. That doesn't mean you take your portfolio to zero. You sit on the sidelines, you wait for October 1st. There's nothing magical about that. People have tried to come up with all kinds of PhD studies of what day of the year should I sell? What day of the year should I buy? all of that will generate an answer. If you put all the numbers in and crank out, there will be a perfect day historically to buy, a perfect day historically to sell. That's also what I call an academic A, but a real world F, because it doesn't mean anything. You can break it down to what minute of the day should you buy and what minute of the day should you sell. Again, also another great, fantastic read, but an F in the real world, because you can't invest off of stuff like that. So all you do is prepare mentally. If September is traditionally a down month, so is August, and was it? No. So don't worry so much about what's going on historically. But if the market that's bouncing off the all-time highs and is also up this morning off the good jobs number, if we get some negative news, I think we will see more towards a movement down in the short term. And I don't care. We're investing right through it. I like the tech stocks. They have a higher amplitude, if you will, if you're thinking volatility. When life is good, they go up higher. When life is not good, they drop down lower. So realize if you have an aggressive portfolio, you're going to take a little bit of a ride. That's okay. It benefits us to the upside. We simply hold on, and do the smart thing on the downside there. And if you have money on sidelines, that's the best time to hop in and buy more, right? So that's where we are with September. Objectives: grow our money, protect our money, live off our money. Today, we're talking about kind of growing our money and using our money smartly with the tax advantages offered to us by the 529 plan. A little bit boring. I got that, but you need to know about this. And if you're thinking, why don't my kids are through college? Well, your grandkids, there's several fantastic ways to be able to put money into a 529. If you buy expensive gifts for grandchildren or nieces, nephews, that sort of thing, another option is to throw a little bit of cash into their college fund, right? They'll look at you funny on their birthday, but they'll appreciate it later on when they don't have a whole bunch of student debt. So it's one of those, this is a long-term investment if you're putting this in, because you're not going to get the happy face that you might get out of buying the latest toy or latest video game for them on their birthday. But if you split it up, say, hey, I'm going to give you some money and I want you to keep half for you, half for your college. It's a pretty smart move, or for anything else they happen to be involved in. So consider. All right. Long-term objectives is to invest in them. Question of the day is how to use those funds. Again, once you have the money in there, there's really three ways. You can write a check directly to the school. That is by far the cleanest. You can write a check to yourself as the account owner, because you, the adult, own it. Or if you gift it into, say the parents, the parents can take the money and then pay the school. There's a little bit of a wicket there. And the last one, which you really don't want to do, is you can give it to the beneficiary for like room and board. If somebody's staying off campus, you can actually give them out of the 529, some $500 a month for grocery money. Well, if you do that, they're going to have to file taxes to be able to, they're going to have to file a tax return to be able to make some of the savings. So generally you want to stay away from that, but we're going to talk more about that. All right, our flow: long, short, open, short, long. We're going to take a look around the world. We'll take a look at our current headlines this morning. The only market thing I'll look at is the Q and talk about that a little bit. There's a couple ways to invest your 529. One of them is just go as long and aggressive and as hard as you can. I did this for several years and I benefited from it. I'm not quite so, I would call it aggressive / reckless. Now that I'm knocking on the door of college bills with inside of a year, really staying full throttle is not necessarily the way to go. But there's also a philosophy that it is. So anyway, we'll talk about that with the Qs. Short-term market execution will execute that. Contingencies and academic resources are standard. All right, let's take a look over at CNBC.com and see what's going on in the world this morning and fresh in the futures here. Again, better than expected jobless claims. If you're out and about at all, if you're staying home due to COVID and the Delta variant and all that, hey, I fully understand that. Respect your decision. That's you. Obviously, things are getting canceled. But if you're trying to get out and support the economy, i.e., live your best life, to use terms my daughters use. We were out, and it seems like every time we go out, the restaurants, there's a wait at the restaurant, but the restaurant's sitting there 2/3 empty. Well, it's because of the employment situation, right? It has always been a challenge as a hiring authority to find good workers anyway. But now when, in certain situations, it's very difficult. So you're seeing under capacity restaurants basically maxing out. And of course, that's not going to help their bottom line. Right. So long term, there's some health concerns as far as the businesses. But you have all these people, the good news is the demand is there. Everybody's standing in line and you expect to wait 20 minutes to get into a restaurant with very few people in it. So just realize that's a different dynamic out there. But as soon as we can unwind some of the stuff from COVID and get everybody out and about, whether that's through vaccinations or herd behavior, or just the thing tapers off, it'll be nice to get back to normal. All right, let's take a look around the world. We're here real quick. We have Europe mixed and pretty light in overall trading. Have Asia up across the board. That's kind of interesting. They'll be up as much as they are. Okay, 10 years fading a little bit down below 1.3. Oil staying strong in that kind of 65 to 70 range. Gold and silver off a little bit, and then crypto's kind of been on fire yesterday. It's, if you look at Ethereum, that's kind of what I would consider the second order of the best of the cryptos out there. It's really been on fire. I have a friend that made the call, and I don't know what he's basing this on, but he goes, if this hits 3,700 this week, it's going to hit 5,000 by end of the year. I usually hear those comments and just laugh because it sounds like a dart throw, but we'll see. I'm more of a Bitcoin kind of guy. Again, I don't own it directly. I don't have a coin wallet or any of that, but I do own MicroStrategy. Again, that's the way I play it. And then Ethereum Grayscale Trust is the way I play ETHE. If you're interested in either of those, reach out to me. All right. There's, you see the headlines there, Chewy. That's one of the shorts we were talking about, down to 9% there. So selling off pretty hard based off of Q2 miss. You can see that. We'll go through the other headlines here while we're talking about it. Five Below was another one that missed earnings, selling off pretty hard. We're not going to try to short it though. There's your jobs number, 340,000, lowest level since earliest days of the pandemic. So again, that's the good news. Texas enabled yesterday on September 1st. Texas had 666. Yeah, interesting number to choose. New laws went into effect in Texas yesterday. What? I couldn't keep track if there are 3 laws that changed, let alone 666. One of which is an open carry. I probably don't have this exactly right, but in general, it's an open carry weapons deal where as long as you're not prohibited by other states, you can openly carry here in the state of Texas. Of course, stay out of churches, liquor stores, and schools. But for the most part, I guess you can walk down the street with an open carry now without a permit. Okay, go Texas. Again, I moved here for that reason, but not that reason specifically, but for the more conservative style rules, if you will, but even that's pretty impressive. All right, here we are sneaking up. I'm talking about laws in Texas. They're sneaking up within 1 minute of the open here. Here's the QQQ. If you're thinking of investing aggressively, again, this is the way to do it. This is most of your tech firms. This is where I go to poach ideas, if you will, for the next and best tech stuff. All right, give me a second here. I want to set up for the market open. Okay, welcome back, everyone. We have 20 seconds to the market open here on Thursday, September 2nd. You have 4 charts in front of you. You have the S&P 500 on the left-hand chart, which you can see it's kind of going higher with that jobless number boding well. We have 1 long in HUT and then 2 shorts in AEO and C3 AI. Here's the opening bell. All right, we are off to the races. Market is open here on a Thursday. All right, going higher overall in the market. Again, I like this. I like the long theory, but I don't like any of the longs we have today. So I'm more focused on the shorts. So we'll look at American Eagle down 11%, AI down 10%. I'm going to bail on this HUT right away because it didn't jump, and look at another one that's dropping off, Chewy, if you will, down 10%. So again, these are all right at the edge of our window. I don't necessarily like that. Let's pull up this Hall of Fame, HOFV. Like this one a little better. So it went from 335 down to 275, smaller price point. So again, a little easier to short. It does have the volume, but you can't go crazy with it. But let's look at trying to get into this HOFV because it has a little more more to fall, if you will. So if we covered at 322 with a 5-cent stop, that would put us 317. I'm not ready to be quite that aggressive with it, so we're going to watch it for a second to see what it does here. I would prefer to go up into the 320s, chill out, build some volume, and then drop from there. But I don't think I'm going to get that, so we shall see. All right, a lot of action over here in AI. I know that's a real popular name, so you can see the a couple 100,000 shares taking place. 50-cent stop. So 48.95, 48.45. You're already at the entry point for the short, so can't really take it there. As far as AEO, it's not moving as much. 26.90, it'd be a 25-cent stop. So 26.65 is the entry right here. That's also kind of tough. I still think you're dart throwing, if you will, by getting into that. All right, AI has kind of left the station. Can't really take it here. 26.65 to the downside for American Eagle. Setting up, I got those three dojis there, 26.90. Let's go 26.65 short with this and a 26.90 stop. So we're going to wait for it to come 26.65. Nah, we can't do it. We can't do that. It's already at 11. That would mean it'd have to drop 14%. It's just not going to do that. All right. AI is already dropped. We can't really take it. And then its HOFV is just not that strong. Chewies, let's come back over to Chewy. Type it in correctly. Does not want to be typed in correctly. There we go. Finally. All right. This dropped without us. Again, you'd had to cover at 840, enter at 79.80. Well, you can still get in this, but it's just, again, bottom end of our range. So not going to work there. All right. AEO has actually given us a second chance here by jumping up so high. So we're going to take this 20. We want this to peak and then take it quickly on the way down. 27.80, 27.50. Missed it. Missed it. Not going to take it if we don't get it back above 27.40. And we're not going to get that. So if you were staring at this and had cat-like reflexes, which I did not bring with me today, you might get a second chance here. Let's look at this again. It's going to have to power up here in the 27.60s, 27.40 to the short side. There it is, 27.40 as we took it the second time. So again, 40-cent stop. We got 27.80. Actually, we'll do a 35-cent stop, 27.75. Up at the top here does cover the high of the day. Again, we're taking this short. So a 35-cent stop, multiply it times 3, that's a $1.05 off of where we took it. So 26.35 is our exit point, which it opened at right down. Well, it didn't open, almost down in this area. So I kind of like that. That's your 3R point. We'll get into 27.05 is your 1R point. And then that would mean 26.70 is your 2R point. So get all this drawn up here. Again, this was kind of we got a second entry opportunity here. You don't normally get that. Looks like my math is off slightly. So let's figure that out real quick before I draw that line. Okay, 35-cent stop. And there's 27.05, 27.70. Nope, that's right. Why does the math look off? Okay, and then 27.70 minus 35, 26.35. No, that's correct. All right. So we're in American Eagle short. Got that second entry opportunity here. 27.40 is where we're in. We need this to basically sell off down down to about 11% where it was pre-market. Then we're exiting at 26.35. So we're in the trade, American Eagle short again at 27.40. You can still take it here if you wanted. You'd have to just adjust your numbers slightly. All right. AI finally did fall. Chewies certainly can't take it here. I'm going to leave this screen real quick and go over to charts. Look at what's going on in the big picture. These are calls for Apple. So Apple must be up today. Looking for it. Okay, up $1.40. That probably takes Apple above the 155 level, which is a magic level for a lot. Well, not quite. We touched 154.98. It's at 154.55 this morning. A lot of call volume at 155, including a bunch of stuff that I have, which is why this 26% is up here. So then yeah, might be looking at the time to move some of those calls, if you will. Clickstream continuation up. Nickel is up on some news. I did see that. MicroStrategy is again up on the Bitcoin being back above 50,000. So that's what's going on there. Roblox getting some love. They've needed it. They've been selling off hard. If you haven't followed the Baba story, pretty good move up yesterday. Let's see, this was, I think, a 3% move up. So anyhow, you did have it fell all the way down to 152. Couldn't really buy there. 160 though, coming north out of here. This has been a buy. I think the bottom's in. I don't think we're going to revisit 160. So I've been long BABA and wrong BABA for a long time. So at your own risk, but a lot of the Chinese names, people think the bottom is in. DD moved up 12% yesterday. Of course, it's probably selling off today. They got some bad news last night. See how hard it's selling off. Not too bad. Down a buck and a half, or excuse me, 1.5% after this huge move. Like I said, this was from 8:30 up to 9:30. So that was a 12% move up yesterday. So pretty good move. Not surprised it's selling off this morning. All right, let's take a look over at what is selling off. Smith & Wesson is selling off hard. That has to be because of the open carry in Texas, but you would think, right? Now, Smith & Wesson does act opposite the gun laws, if you will. Every time you think that somebody's coming for your guns, the stock goes up, and I don't know that it should, but it does. And then when they're not coming from your guns, then the stock goes down. So anywho, if you believe long-term, then gun makers, then own the stock. Don't try to play it off of political news, is my opinion. All right, DD there up, a couple percent off. It's going to take a look at that. K-Web selling off after a nice move up yesterday. Okay. Overall, not a whole lot of stuff in the red, so I kind of like that. All right, let's go back and take a look at the longs real quick, and then we are going to look and see how our trade's doing. We're basically even in this trade here. So again, you can take it here. We'll check that before we go off air. All right, let's go back to the 529 plans a little bit. So the theory of investing in to get into the 529 plans, they're easy to open. You can open in any state, and you can fund them for, your future. So you are the account owner as far as the adult is the account owner, and the child who's going to college is the beneficiary. Now, I still have some funds in my own name where I'm the account owner and the beneficiary to finish up a degree that I haven't quite finished yet. So there is an opportunity where you might be both, but you can build it up in one account. I have 2 kids, but I have 3 529s, right? I have my own. I have one for each child. You can move the money in. You can move the funds in between the accounts as you see fit. When I started these, I started with the birth of my oldest. I put in $250 a month, which is more than you need if you're starting at birth. I can help you with those numbers if you kind of want to know them. But I went heavy. She was born in 2004. The best thing that can happen, and a lot of people don't realize this, is for a down market, especially when you're building wealth. But obviously, for anyone who started investing in 2004, you're looking at 3 to 5 years later, getting punched in the face pretty hard by the whole 2007 and 2009 global financial crisis. During that sell-off, though, it's that sell-off that allowed me at $250 a month to jam a ton of money in that year and a half to where I actually stopped putting in to her 529 when she was in 4th grade. That never would have happened had we had a straight up market. I'd still be putting in. I stopped putting in these things a long time ago, and they just continue to, increase. I do have some other money that's being gifted into these accounts, but I don't have any of my own personal money that has gone into any of these accounts since my oldest was in 4th grade, which is 7 years ago, right? And they're well into the 6 figures. And that's not bragging. That's just math of if you start early, you end up with a decent amount of money in there. And I know when I say, okay, he's saying 6 figures, and that'll get chewed up with college tuition. And I'm like, yeah, it will. Yeah, I agree. I know it's expensive. I'm not trying to say that getting to 6 figures in a college fund is the end, but it certainly takes the edge off of any student loans that might be going on out there. So I stayed aggressive. I don't really actually tell anybody to do that now. If you can go back in time, then yeah, do it. But if you can't go back in time, which I don't know anyone that can, then you want to invest smartly. There are target date funds. I don't use those because I actively manage the 529s. But if it's just passive fire and forget money, use the target date fund I would use their senior year in college, not their freshman year. So you can stay a little more aggressive longer because you're not going to spend all your money on the freshman year. Okay, let's switch over to Investopedia. This is a complete guide to 529 plans, which kind of scares me because it's such a complex topic. This could be pages upon pages. We're just going to flip through here real quick, look mostly at the key takeaways, make sure I've covered them. They are run by the states. If you're in a state that has state taxes, then you probably want to look at your own state first. You will likely get a tax advantage. If you are in Texas, it does not matter. You can go anywhere. I have mine with Schwab, and I can't honestly remember which state sponsors it. I want to say it's New York, but either way, whoever sponsors it, really the big difference there is your investment options and then the fees. I like Schwab because it's all right there. It's under one house. It's under one hat, excuse me. I can check it on my app. I can check it 15 times a day if I feel like it, but it's all right there and available to me. So that's important. All right. A ton of money is flowing into these things. There are, the maxes, we talked about this yesterday with a client, the max is 15,000 a year. It's still the same as the gift tax, but you can bring 5 years forward if you want. So that's 15,000 times 5 is 75,000. You can do that per child. So if you have 2 children, that's 150,000 that you can put in, at once, if you will, if you're looking at the lump sum. If you're splitting it out, again, 15,000 a year. If you go over that, then you have to do some math. But generally, most people aren't doing that. Now, there are people that are super funding these things. That where you can try to jam as much money as you can. It's kind of the last tax haven, if you will. I would say before super funding a 529 plan, you need to have probably a net worth of over 3 million, probably closer to 5 million before you're starting to max out the 529s. Where's the max? It's around 600,000 per child. Is where you want to max out for your 529s before you actually legally can't put more money in it. This one here says 525 is the max. I think it's 600 in most states, but again, it's a state number, so therefore that's why this site is not obviously going to have it. As far as what you want to use, again, if you're going to go just completely passive, that's your strategy. Pick a target date fund, and again, I would say the target date would be their graduation year, because that's when the funds are going to go, to zero if you have everything covered and did the math perfectly, which it's unknowable, so don't expect that, but realize that's what you can use them for. And that's what I'd recommend. Otherwise, I would invest it, actively along with the market. Right now is not the time to get super aggressive. It's just not. We got tax reform coming up. I think you're being a little bit arrogant if you're just staying super long, super aggressive right now. All right, Secure Act came out in 2019. You can use up to 10,000 in student loans debt repayment. That's a one-time 10,000, so you can't do 10,000 a year. You can't rack up 150,000 in debt and then pay it off upon graduation. You can do 10,000. So when you're talking college terms, that's not a lot of money. In the real world, it is, but not for paying for college, it seems like. There's also things you can buy. You can buy a computer. You can use their internet plan that they have for access to the internet. You can pay for. You can't pay for their phone, but you can, if you pick out the data plan, pay for that if that's their sole source of, if they don't have data at their apartment or whatever for access to Wi-Fi, you can use it for the data part of the phone plan because that is their hotspotting to be able to do their educational work. There's some rules here that can get complicated if you're the account owner and you're not one of the direct parents. You can do it, but there's some rules, so I would read up on that or just gift it to the parent for use with the student. Hey, that's the complete guide, hon. It doesn't really cover into too much, so I'll leave it at that. When you go to spend, though, let's talk the spend plan. Do you use it for freshmen? They're for their freshmen. Say you can only pay for half their college. That's the way the math's working. You use it for their freshman and sophomore year. I would say this is really more cash flow dependent in your life than, from a pure mathematical perspective, you would cover the first 2 years out of pocket and then use the remaining funds for the other 2 years. You're simply, in that case, trying to gain more exposure to the market, i.e. 2 more years of investing. The reason you use the 529 is as long as you use the funds for education, they're not taxed on all those gains, which can be significant, especially if you started early. If you're cash flow challenged or you're concerned at all, either go half and half, pay half out of the fund, pay half out of pocket, or simply use what you have and then you pass on to your child. Either you eat it and pay for it out of pocket yourself, but realize student loans aren't the end of the world. We don't like them, especially if you're like me that stepped in the world without any student debt, but a lot of people have them. So, consider it's cash flow dependent. One thing I'm looking at with my daughters, if there's, I think it's a good strategy. I talk to clients, if you have any doubt about a student staying in school, and I don't really, but if you don't have enough money to cover their entire college, is have them pay for the first year. So put the first year on student loans. Or at least the first 10,000 on student loans and say, hey, go to school, prove to me you can stay in school. And then when you graduate, I will wipe away that debt. So consider that's a strategy out there. All right, that's all I'm going to cover for today. Got a little bit long-winded. Thank you so much for stopping by, and we will catch you tomorrow. Hey, live from Arizona tomorrow. We'll be in Scottsdale. So obviously a little bit earlier in the day for me due to the time zone change, but we'll be checking you out from Arizona tomorrow. So have a good one.